Okay, hey guys. So today with me, Michael is a new funded trader of Trader Pool, and we are going to talk with Michael about his journey within Trader Pool, how he got funded, and of course, the way he see the trading game generally. And of course, anyone that can relate to what he's about to say will probably get a lot uh, and can take some to his trading as well. So, Michael, how's it going?
Hey, it's going good. Nice to finally meet you.
Yeah, yeah. Happy to be here, and I'm glad. First of all, excited. Congrats on that. Your chart
Thank you.
looks amazing. The way that you traded those small caps, really, really incredible. I see obviously a lot of traders, within Trader Pool. Some of them trading big caps, some of them trading small caps, and a lot of the small caps guys not really making it because they are trying to swing for the fence. And
Right.
you actually did it pretty nicely, and we'll look at your chart on the dashboard in a second. So let me ask you this, Michael: how long you been trading for?
So I've been trading for about 5 or 6 years.
Right.
Um, I learned from, I'm not sure if you're familiar with him, but he's a penny stock guru, Timothy Sykes.
Yeah, yeah, a famous one.
Yeah, yeah. So I'm a part of his challenge, and he has a student in there named Tim Grattani, and Tim Grattani has really taken a lot of us traders under his wing and taught us how to short sell these small cap volatile plays.
Right.
So that's who I learned from, and yeah, I've been trading for about 5 years.
Nice. That's good enough to to find your edge, to find the right spot for you. So you've been, as you said, trading mostly penny stocks. Are you trading anything besides that, or just the penny stocks?
It's just the penny stock.
Okay, great. So do you usually short sell them or also buy it? How does it work?
So right now, I'm currently 100% short selling. I look for the overextended top percent gainers, and I will trade the first red day or a short into previous resistance. And I can take advantage of that because there is uh, overextension, and that overextension usually, if there's a hard crack, that usually signifies that that might be a sign that the top is in.
Right.
And if I'm wrong, I just cut losses quickly, and then I can always reshort higher.
Okay.
So yeah.
So let's talk a little bit about that, because a lot of I myself, I'm buying the dip a lot. In most cases, that's one of the best or my favorite strategy to use. Just buy the dip, and you're doing the opposite. You're selling the top, right?
Right.
So a lot of the questions that guys are asking me on webinars or whatnot is, how do I know that this is basically the bottom? How do I know that the price won't tank even furthermore? And the same question can be applied also when you're selling the top. How do you know actually that that's it? We reached the top. That's the main resistance that will hold, and the short sellers will drop the price here. What's the strategy here?
So basically, the short answer is you don't know that that's the top, right? When you're buying a dip, you never know that that's truly the bottom.
Right.
When you're shorting a top, you never know that that's truly the top. But you have, um, I would say, indicators. Like what I look for is a hard crack. So let's say resistance is at $2.50 and the stock gets up to 275. It's past resistance, but then it has a hard crack all the way down from 275 down to about 215, 220. Whenever it does that, I wait for a bounce, and now I can use that 275 as my risk. that high of day that it just set. And if I'm wrong, like I said, Tim Sykes always taught us to cut losses quickly. And I think it's very profound in the sense that if you're wrong, you minimize the loss. And if you're right, then you ride it and you allow the chart to play out.
Yeah, yeah, definitely makes sense. That's basically what I do also when I'm buying a dip. Not just going in as soon as I see a new low. I want to actually see that it's holding it, and you see a bounce from the bottom, and then you can actually join in. So that's a great technique to use. Are you usually scaling into your position, or you just buying in one chunk? How does it work?
So originally, I was taught to buy in by Tim Grittani. I was taught to get my position all at once. But um, but after trading with Trade the Pool, it was more beneficial to scale into my positions. So I would break up the trade into about 2 trades or 3 trades, and then I would get a nice solid average. So it was an adjustment that I had to make with trading with Trade the Pool, but I think it's something that I'm going to use going forward because I see the benefits of it.
Nice. Yeah, definitely. And talking about Trade the Pool, how did you like the program, the evaluation process?
I loved it. I loved it, man. I think what you're doing with Trade the Pool is really monumental. I think it's giving us stock traders an opportunity to prove our skills and then get access to capital that we can then use to make profits. So at first the risk parameter, I thought it was too tight, but then after trading with it for a while, I realized like, no, I was swinging for the fences. So
Yeah,
like when you see in my chart, in the beginning, I was oversizing my position size. I was sizing too much, and that's why I was taking those losses, and I almost got to the max drawdown. Well, I then sized down to about half of what I was using, or a quarter, and I found success.
nice. So you're basically saying, don't try to go to swing for the fence. Take it slowly, step at a time, right?
Yes.
And definitely something that I see with a lot of traders. Those guys that really looking for the one lucky big trade, or the guys that trying to do it consistently with small chunks every time. So you definitely see the difference between the traders.
Right.
Speaking of that, let me share the screen and let's look at your performance. And as you mentioned, so yeah, so as you mentioned, basically the first time when you started to trade, is that the first time you trading with Trade the Pool? That's your first evaluation account?
No, actually, this was my I want to say my third account.
Third, okay, nice.
Yeah, it took me some time to get used to it.
Right,
But once I did, it was off to the races.
nice. So you started dropping down, almost reached that max DD, but then, as you mentioned, you cut your sizes basically and did some additional adjustment. And really beautiful chart, man. I mean, most traders won't have this tiny little pullbacks. They will have like a nice sharp pullback, and maybe then will bounce up. You did it perfectly, really. I gotta say.
Thank you very much.
And I also looked at the trades. They look pretty decent. You're using your sizes the right way. You have nice profits of a couple of hundreds. So yeah, definitely the percentage success rate looking very good.
Thank you.
And
Thank you, Michael.
and now I see also that you also had a pump. A pump is basically, for those of you who are not familiar with, a pump is when we increase the daily loss risk when you have 5 consecutive winning days and you reach a certain profit, and basically instead of risking 1,300, you actually jumped to the next one, 1,400. So you have more risk to take any given day, and we also increase the exposure, the max buying power, basically, that you can use. So that's a very really nice results that you have here. I guess, did you have, maybe let's talk a little bit about that moment when you reached like a double top of the 3,000, right?
Mm-hmm.
Do you remember this time? Because you reached that, you had a pullback, and then you took it to the next level. Do you remember what went through your head when you reached that double top? Did you did you have like a mental side that telling you to increase your risk, or go bigger or stuff like that?
So I think what happened, I read this book called The Big Leap, and it talks about upper limit barriers. So whenever I got to that 3,000, it almost felt like it was too good to be true.
Mhm.
And I started self-sabotaging by doing things that that I didn't do to get there, right? So to get there to the 3,000, I sized down and I just proved my consistency. And then once I got there, I was like, okay, I need to hit big. This play is a monster play. I don't remember the ticker, but I remember it was up about, I think, 300 something percent, and I wanted to short it.
Mm.
And I think I just got overzealous trying to play too much size too fast, and it
Right.
knocked me back. But I think that knockback was actually very helpful because it allowed me to refocus and re-strategize.
Nice. That's yeah, that's also something that I see with a lot of traders. I know I had it many times in the past. It's called the fear of success, basically. So FOS, fear of success. When you reach in that moment when you actually, as you said, like a leap to the to break the ceiling, right? So
Right.
you reach that moment when you're almost touching the success, and for some reason mentally it's kind of taking the nerve or something like that, and basically you in most cases will see a pullback. But in your case, you got that perfectly, and even after the pullback, you managed to push higher. So really
Yeah.
nice, really really nice work here. So maybe just for to sum it up, I'll stop the share screen. Okay, so maybe to sum it up, let me get some tips from you. You know, guys are listening, maybe want to join Tradipool, maybe already in the process. As you said, you have like 3 accounts with us. So give me some tips that the guys that are listening can actually benefit from, besides, of course, what we already covered that was gold.
So basically, whenever you see that, because I did the extra buying power, which gave me access to $160,000 in capital.
Right.
Whenever you see that amount of capital, it's like, oh, I have to use 75,000 on this trade, or I have to use 80,000 on this trade. And it's actually the opposite. You'll make more money by sizing down. So I think, what really helped me, what was game changing for me was that in in any of my trades, my max position size was about 7 or 8 thousand
Mhm.
dollars. And by doing that, I was able to minimize the losses. And I found that that was sort of like the sweet spot, because you have $1,300 before the RPD,
The risk
um,
per day.
the risk per day, right? You have $1,300 before that, and then so you don't even want to come close to that. You want to allow there to be a lot of room whenever you're trading. So I sized down dramatically, and I think that was the biggest key ultimately.
Yeah, just go slowly and not just trying to, like we said, go for one big lucky trade.
Right,
Yeah.
right. And I also I do something called the first 45-minute rule,
Mhm.
where I only take so I can only short bounces on stocks that I have already played in the first 45 minutes. After the first 45 minutes of market open, I have to then only take new setups that come. So if a new short into resistance on a new stock presents itself, then I can take that. Or if a new front side short on a 300% gainer comes, then I can take that. But if the stock that I had originally played is having a crazy bounce towards a VWAP, I can't take that because I've seen too many times in the afternoon I would give back my profit shorting a bounce on a stock that I had already been profitable on.
Right. That's a great rule. And, a lot of traders have great rules, but if they're not controlling it, not enforcing it, that will be the problem, right? So,
Yeah.
so yeah, as long as you keep that rule, that is definitely the key. So this is why we also, when we develop Trader Pool and we build that risk mechanism, like a default mechanism of risk. So you will have the daily loss and the 30% out of your daily loss and stuff like that, that can actually help traders. And I see it been working great for a lot of the traders that we have, you know.
Right. Yeah, I think that's, like I said in the beginning, I thought it was a hindrance, but it's actually super beneficial. One of the best positions to be in is when you're up about $3,000 and your risk per day is still 1,300. So if you were to take that max loss of 1,300, your balance would still be in the profit.
Yeah,
So knowing that gave me a lot of confidence to continue to trade and scale into these winners.
nice. That's amazing, Michael. So again, I wish you lots of success. And when you make profits, we make profits. So it just makes sense, a win-win situation. And
Yes, sir.
thanks so much for that. Make sure you share it with your friends and spread the word.
Yes, sir. I will. I look forward to continuing to work with y'all.
Sounds good. Feel well.
Yes, sir.
Take care for now.
Bye bye.